Welcome back. Less than 3 weeks to go for the union budget. We learned that the government is considering tweaking several customs duties. Timsi Japuria is here with more on what we can expect.
Well, that's right. What we are given to understand from sources is that the government is considering a customs duty rejig on as many as 200 plus items to protect domestic companies. Sources say that currently the government is reviewing import duty exemptions that are given to these 200 plus items. The exercise is understood to be underway to assess to remove import duty exemptions that create an inverted duty structure scenario. Sources said that the customs duty rejig under this review exercise is likely to benefit sectors such as solar, EV, pharma, electronics and mobile phones, steel, etc. And yes, all of this is under active consideration. Sources added that the government is keen on having WTO compliant support mechanism for domestic companies and is eyeing some measures to protect the domestic companies from the Trump administration's protectionist policies. As of now, no decision has been finalized as yet, but definitely a detailed review is on the cards, and now to be seen is what all does the upcoming budget unveil for the industry when it comes from the custom duties side. Back to you.
All right. The union government has cleared plans to dilute its stake in 5 stake-run banks to raise as much as 10,000 crore rupees. Sources say the plan to pare stake in Punjab and Sindh Bank, UCO Bank, Central Bank, Indian Overseas Bank and Bank of Maharashtra has been cleared. Each bank is likely to raise 2,000 crore rupees through a qualified institutional placement. Sources say this stake sale will happen in the current fourth quarter of this financial year. Government's stake in all these banks is above the 25% minimum public shareholding mandated by market regulator SEBI. Crude oil prices hovered near the 4-month high as investors weighed the impact of outgoing US President Joe Biden's toughest sanctions yet on Russian oil. Oil prices have surged by over 9% since the start of the new year. On Monday, the US announced sanctions on 2 oil producers, including Gazprom, and 183 vessels that carry Russian oil. The move could potentially cost Russia billions of dollars a month. India Inc. has been pitching for relief on the income tax front this budget, and here's why. The government's mop-up from direct taxes surged by close to 16% in FY25. However, here's the catch. Corporate taxes, which is a crucial component of the direct tax kitty, rose by only 8%. Non-corporate tax collections, which include taxes paid by individuals, surged over 21%. Indian industry bodies, including CII and ASSOCHAM, say that there is a notable contrast between personal and corporate taxes. Industry feels that a cut in the income tax rates would put more money in people's pockets.
Right now, the rebate starts from 7 lakhs. So I think if they can take that up to 8 lakhs, I think that will provide some relief to people. And the maximum, at least slab rates, 30% rate kicks in from, say, I think 20 lakhs of income, from 15 lakhs of income. If that can be accelerated to, 18 lakhs, 20 lakhs. And likewise, you trickle it down. And maybe you can cap it at a certain level so that people in the higher income brackets may not, of that certain level don't get that full relief. But if you provide that, I think that will provide a tremendous spurt in consumption.
Joining us now to discuss this is TV Mohandas Pai, chairman at Aarin Capital and former chief financial officer, Infosys. Mr. Pai, give us a sense of what is your hope from the union budget? You have made a case for the relief for the middle class in terms of income tax in the union budget. What, according to you, can be the low-hanging fruit in terms of exemptions?
The low-hanging fruit could be that they expand the tax slab, because if you look at data, 2 years ago, income tax collection was about nearly 7 lakh crores. It went to about 10.35 lakh crores last year. And Indian income tax on individuals could go up to possibly 12.5, 13 lakh crores. And this year, you must see gross tax collection is growing at 22%, 24% for individual income tax, and for corporate tax, gross tax collection is growing at 15%. What figures you are showing is the net tax collection after refunds. Please remember, refunds are for the previous years. There has been tax terrorism, and many of the cases are getting settled now. And there's a refund. This year, till about 11th of January, I think 2 lakh crores or so of corporate tax refunds have come. I think they must expand the tax slab and make it simple. 0 to 5, no tax. 5 to 10, maybe 10%. 10 to 20%, and about 20, or maybe about 25, maybe 30%, and surcharge to kicking after 50 lakhs. And no exemption except 80D for insurance and 80G for philanthropy. Because what government is telling us, we're giving you deductions up to about 7.75 lakhs or so, you don't have to pay tax. But please remember, what we want is cash in hand. We want money in the hands of people to decide what you want. They're giving huge deduction for housing, but out of 4 crore people who are paying income tax, I think only about 1 crore or 1.2 crores have got housing loans. The rest don't have housing loans. So you must have more cash in the hand and simplify the entire tax slab. So I think by doing this, they could possibly put 30 to 50,000 rupees in the hands of many people and stop forcing people to file returns till they cross 5 lakhs. I think we've got to simplify and give it as an option. If people want all the exemption, the holes, let them do that. I think that is there today. We have 2 classes of tax slabs, and I think that the kind of tax slab which are simplistic, and we should have only 3 tax slabs. PC Chidambaram gave us 3 tax slabs long ago. It was very simple. You could remember it.
Right.
You wake up at 1 o'clock in the morning, remember it. But now we are 7. Now the thing is come to 5 or 6. We need 3 tax slabs. It can be easy because the biggest challenge is people need money in hand. They need cash in hand.
Mr. Pai, give us a sense of what could be the big idea in terms of reforms, ease of doing business. You've spoken about the need for relief for the middle class, and this is also because we've seen a dip in consumption and there is a need to revive it. Many economists have already told the Prime Minister's office and the government about the need to do so. But about one big idea on the ease of doing business front, what would that be?
Stop tax terrorism. Let me explain. In 2014, total tax disputes were about 4.5 lakh crores. And Finance Minister Jaitley promised us that they'll stop tax terrorism. It was there in the BJP manifesto in 2014. And 2024, the total tax disputes have gone up to about 12.5 lakh crores. And if you look at the data which we published in an article, I think about 5.65 lakhs cases are pending at the level of the Commission of Income Tax. And I think it's very important to make sure that tax harassment stops. So what they should do is next 1 year, they're not going to raise any new taxes to settle all the old disputes earlier. 2, raise the limit of appeal to the Supreme Court from 5 crores to 50 crores. So at least you respect the decision of the court and do that. And secondly, we must have a stop to regulatory measures taken by RBI, SEBI, and IRDA and everybody else. Too much of regulations have come in the last 1-2 years, and liquidity in the market has been constrained. RBI especially has issued regulations without consulting people. It is stopping business. Like the regulations to say that if banks invest in startups or companies, they cannot lend to the same company because there was some misuse by some companies who are in the business of buying debts. And I think it's very important to attack those people who are misusing, not everybody else. And I think that's very important to do for next 1 year. Not going to issue any regulations. And the third thing is calling upon CBI, income tax, and ED to make sure they go to court for all the cases they opened in 6 to 12 months. About 55,000 HNIs have left this country in the last 10 years because of tax terrorism, decline in the quality of life here, and other things. I think this is the biggest thing that could happen for ease of doing business.
Okay, Mr. Pai, we've run out of time, but thank you very much for joining us on the program. Before we wrap the show, let's talk about Growth Code, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights, strategies to navigate the markets and make informed trading decisions. Today, we will explain how goal setting in trading depends on whether you're into intraday or positional strategies.
Overtrading often feels like you're maximizing opportunities. That's not the truth. Beneath the surface, it's quietly eroding your profitability in ways that you might not even realize. Every trade carries a cost, small on its own, but substantial when it piles on over a period of time. When you overtrade, there are transaction fees that add up quickly, eating away on your bottom line, sometimes faster than even your trades can recover. But these costs aren't just financial. Overtrading leads to psychological burnout. Constant decision-making drains your focus, increases impulsive behavior, and pulls you away from your strategy. True profitability comes from discipline, not in the number of trades that you take, but the quality of those trades.